well. And do we have,
We actually do, we had a last minute add-on that I think Crystal has there for you.
So I have a resolution entering into agreement with F&E Payment Pros on behalf of the Warren County Treasurer. This is just a new check scanning hardware and software system to scan payments received by check through the Treasurer's office.
So moved.
and yes for me as well.
And that's all I have.
That's it? Okay, so now we have an investment advisory board meeting. And I guess this is the first one for you, is it not?
It is, thank you.
Well, not that you've attended, but that you're presenting. Nice to
Indeed.
see you, Treasurer Coogan.
Nice to be here with you this morning. Welcome. And thank you for approving that resolution as well. That should help us actually even about this, should enable us, it's kind of a super scanner that'll help us process payments a lot more quickly. Hopefully that'll enable us, should accelerate dollars into the treasury. That'll enable us to get a little more interest on the float for some period of time during collections. So I appreciate that. So anyway, so we're here this morning for Investment Advisory Committee. With that, and since this is my first one presenting here to the commissioners, or with the commissioners here, and Brighton's here as well as part of the committee, so that is the five of us are the Investment Advisory Committee, and we have the obligation here to meet quarterly. One of the primary functions also of the committee is approval or drafting, review, and approval of our investment policy. So we do have that today as well to review with you. And I figured also, with this being my first time here, that I would bring in our investment advisor with Meter, who I believe has been here before in front of you. So thought it a good time to review with him where we stand with our investments, and also kind of project for us what things look like over the coming years with our portfolio, and what our strategy is going forward with that, and also to review that investment policy with all of you. So without further ado, I'm going to go ahead and introduce him and allow him to come up and give you a little presentation. This is Jim McCourt.
Good morning.
Good morning.
Good to see you all again. Jim McCourt with Meter Public Funds. So I believe that we began working with the county, I think in 2018, and I was here a few times initially during Barney's term, and then he sort of put me in the cage for a while. He just was comfortable doing these meetings on his own, but I've gotten to know Randy a little bit over the last year or so, and especially with his first meeting, I volunteered to come in to talk with you about the county's portfolio. And just to remind you who we are a registered investment advisor, meaning that we are a fiduciary on behalf of the county. So we are not a broker. We are essentially an extension of the treasurer's staff, obligated to act in your best interest to help manage the investment portfolio. Work with over 260 public entities throughout Ohio and over half of the counties. And I do regularly go to many of the county's investment advisory committee meetings. So with a new treasurer in office, as much as he or you would like to see me, I'm glad to come in here quarterly and do these meetings as well with you to give you regular updates on the portfolio. But I do have a little packet in front of you. I don't need to go through every page of this or to belabor many of the details, but to give you a high-level summary on what's going on in the markets and with the portfolio. You have been benefiting now from a couple of years of relatively high interest rates in the market, of being able to build these higher rates into the portfolio and lock them in. And I think that the previous treasurer, and now the current treasurer as well, does a really good job of communicating with us on the county's cash flow needs in order to minimize cash balances that you keep on hand in liquidity type funds, and help maximize the amount of investments that can be going into what we call the core portfolio, and buying securities and really helping to lock in and secure these yields that have been really nice for the last couple of years. We are in an environment, I'm sure you know, that the Fed has now begun to at least modestly cut those interest rates. A year ago, they cut by a full point in the final quarter of 2024, held on pause through the first 9 months of this year, and then began or resumed cutting interest rates in September. So we are now down to a target Fed funds range of 4 to 4.25%. Fed funds are overnight short-term borrowing rates. They're going to really most impactfully affect things like Star Ohio, your short-term funds that you have in those liquidity buckets. The anticipation is now almost totally baked in that the market is expecting the Fed to cut again at the end of October here, and then probably one more time in December, so to get another half point down by the end of this year. And then potentially a few more cuts throughout 2026 is what the market is expecting currently. I think there's still plenty of debate. The Fed is trying to watch their dual mandate of maintaining price stability, watching inflation, trying to boost the full employment of the labor market. That's the balance they're trying to strike with their monetary policy. But recently, that labor market has sort of taken the forefront. We've seen some slowing non-farm payrolls reports. The Fed has gotten the message that maybe we need to be a little bit more accommodative, start to make rates more neutral, ease policy a little bit to help the labor market out. But they want to do that, make sure that they're not cutting too quick before they have successfully battled inflation. So that's the balance they're trying to strike. But the expectations are nonetheless that they will continue cutting rates throughout the rest of this year and then probably some into 2026. That's my cliff notes on the market. I'm going to flip into the county's portfolio now. As you look into page 10 in your packet, you can see this slide that gives an overview of how the county's investments are looking. So this is updated throughout the third quarter of the year. Yeah, and I think there's a couple extra copies up there for anybody that needs one. So on page 10, titled Current Portfolio, you can see what the county's portfolio looks like through September 30th.
I think we're on a different page. Our page 10 is just a position statement.
There should be a front page 10. I think there's two sections of page 10.
Are there copies available for
I can make more. I think there's a couple extra copies up front here, but. Are you able to find it, Commissioner Young? Good, okay. So what we report on here, Meter actually does serve as the investment advisor and administrator for Star Ohio as well. Star Ohio is the state's local government investment pool. It's essentially a AAA rated money market fund. It's meant to serve as a liquidity tool for public entities. So the county uses that as a primary liquidity reserve in conjunction with your main bank account to fund daily operating needs. So we watch that balance very closely on behalf of the treasurer to determine what's appropriate to stay in the core investment portfolio then, which is what we are essentially managing on a day-to-day basis. That's the securities book value that you see there. So about $336 million in securities, $22 million in Star Ohio as of the end of the quarter. When you look at that securities portfolio as a whole, the weighted average maturity of all of them, you own many, many bonds of that in that $336 million, but the weighted average maturity of all of them is about 2.65 years. The weighted yield to maturity up over 3.6% now. Now you might recall a few years ago that was much, much lower. Over the last few years, as you've been continually reinvesting into this higher interest rate market, starting to shuffle out, phase out the lower bonds that you own post-COVID, building in the higher yielding securities now, starting to lock those in for the future. So when you sort of even dig underneath the hood of that 336 million, on the bottom of that page there, you can see how that's distributed. Primarily out to 5 years, outside of one exception, the maximum maturity that you can have in county investments is a 5-year maximum maturity. So we've been continually trying to fight an aging process. Every day, every bond that you own is getting a day closer to maturity. So we're either taking those maturities and reinvesting them out longer, or potentially selling some bonds prior to their maturity, trying to reinvest them out longer, lock in those rates, maintain that overall duration. When you look at that line graph on top of the maturity distribution, that is the underlying yields within each of those annual buckets. And so what that tells us there is that your lowest yields are your shortest maturing ones. So you are still finishing this cycle of getting rid of these lower investments that were bought in the post-COVID environment and reinvesting them, which for now, even though rates have started to move modestly lower, is still a higher reinvestment rate. So over the next year, you have 61 million maturing out at 1.9%, going back into the market currently at 3.5, 3.75. So you're going to continue to pick up yield on those reinvestments. That's going to continue to move that overall weighted average yield to maturity higher, even though the Fed is in a lower rate environment. So you're going to continue to trend upwards toward 4%. And then the idea is to have that locked in for as long as possible, because who knows where the Fed's going to go over the next couple of years, how low they might go, to have these rates locked in for as long as possible, but to also make sure that we have a consistent flow of maturities to backfill any liquidity that you need as the county has operating expenses going on. So we don't want to take all of these funds and just lock them in for 5 years. We want to make sure that we have some distribution to help backfill that liquidity as you need it. But to the extent you're able to, lock in these rates for the longer term. The pie chart in the upper right corner of that page is the asset allocation you're invested in, all high quality fixed income securities. Important to note, all compliant with Ohio Revised Code Chapter 13535 and the county's approved investment policy. Then when you go to the next page, this cash flow review. So we charted over the last 4 years or so the overall investable balances of the county. And we break this down into the bottom lighter shade is what's in this core portfolio. The dark blue shade is what's in your Star Ohio balance. And you can see a couple times a year that Star Ohio balance really jumps as you take in property tax collections and hold those funds for 4 or 6 weeks before you distribute them back out to the local political subdivisions. But what we're looking more in there is the trend of the core portfolio. And in the last couple of years, it peaked in 2022 when you were getting in ARPA funds. You had a couple rounds of ARPA proceeds, and then within the last couple of years spending some of that down. Also had some contributions to the tennis center and things like that did decrease the operating portfolio a little bit. So you can see that trend start to happen here. And what's important is that we communicate with the treasurer's office to understand those cash flow needs so that we manage that appropriately to make sure that you have the cash on hand as you need to meet those expenses. So the portfolio's gone down a little bit, but we've always been able to meet the operating expenses, maintain that balance to help try to maintain an appropriate amount in the portfolio on an ongoing basis. The next page looks at your investment income. So that's ultimately what you're trying to get out of from this portfolio is how much money are you making on it. What we charted here is going back the last couple of years in realized cash basis investment income. That's how Ohio Public Entities operate. It's on cash basis accounting. So this is just from the core portfolio, essentially what we're managing. This strips out the Star Ohio and the liquidity component, but the main core portfolio of what you've made over the last couple of years. You can see back in 2023, about 4.7 million, jumping up to about 7.5 million in 2024 as you're continuing to invest in this higher rate market. This year already, through the first 3 quarters of the year, realized over 7 million with almost another 3 million projected in the bonds that you currently own when they're going to pay throughout the last quarter of the year. So you should be in the $10 million range just from the core portfolio. And as the treasurer mentioned in his preview email to you about this meeting, expecting to get close to 13 million overall when you factor in the Star Ohio income as well on top of that core portfolio income. But then more importantly, when you look into the next few years, and this is the idea of this strategy of locking in these rates, is these next few years into 26, 27, and even 2028 shows what you essentially already have guaranteed. This doesn't assume any reinvestment of maturities yet. This is only bonds that you currently own, when they're going to pay and how much they're going to pay. So already a jump into next year of almost $11 million, and then even into 27, almost 10 million, and then almost 8 million into 2028. Even though at this point, in 2028, you only have about half of your money even invested out that far yet. So as we continue to most likely reinvest at least a lot of these upcoming maturities, get them into the market, which is still relatively high in rates, I would expect to see 27 have another jump over 26, 28 be somewhere comparable in that range, and then the idea is that any decline after that would be at a much slower pace than the market yields are dropping because you're taking this aspect of locking these rates in. Everybody on board with that? Makes sense? Any questions, comments, concerns? The one thing, I won't go through every page of this. I know the treasurer has emailed this around. I wanted to include our monthly report. So this is what we send to the county and the treasurer's office on a monthly basis, comes out of our accounting and reporting system. Just want to make sure that you are familiar with how to read these reports that you get from us. The first few pages are just more market data. Then you get to, on page 6, summary page, which gives you some of these similar high-level characteristics. The custodial reconciliation on the top right corner of page 6. We get a daily feed from your custodian, U.S. Bank. So it's important to note it's not Meter that holds any of your securities. You're in a third-party custodian at U.S. Bank. We have a daily reconciliation with them to make sure that we agree that every penny is properly accounted for with the bank. So this shows you a summary of all of the activity that happens during the month within the portfolio. Then the next several pages are that position statement. Within here, we also bring in your Star Ohio balance to incorporate it to make this really a comprehensive investment portfolio. Again, we have that ability as the administrator for Star to pull that into these reports. So the several pages of the position statement, which is all of the details of every security you own. When you get to page 14, you have the transactions. So this is a recap of everything that happened during the month. You can see the bonds we sold, the bonds that we bought, bonds that matured out of the portfolio. This is all of the activity that happened during the prior month. After that, shows a recap of all of your income. So this is every bond that paid a coupon payment that was received during the month, in addition to the Star Ohio income that you received during September. After that, projected income, starting on page 19. So every month that we issue this report has a new 12-month look forward based on the readjustments of the portfolio, the new 12-month look forward of expected cash basis income to be received from the portfolio. So this is always a good way to look at this and be able to get some sort of sense of budgeting for income purposes on what's going to be coming due and received out of the portfolio over the next 12 months looking forward. That is a summary of the investment report as well. Any other questions or any questions at all on that?
So are you making, so you put down a monthly report here showing all your investments in a particular month.
Mm-hmm.
Do you change those investments every month?
Not all of them. The transaction pages show you the activity that happened during that month.
Yeah?
So we do have what's called discretionary authority over the portfolio. So we talk on a regular basis to set a strategy with the treasurer's office, and then he is essentially saying, okay, go implement that strategy. And so we're looking at the markets to maintain, to try to maintain that strategy. So sometimes that means just reinvesting maturities that come out of the portfolio. Sometimes that means actually actively manage selling some bonds that you own and reinvesting into other purchases.
And so you're the one actually making any trades, and you're being given a policy decisions or a strategy, you say, by the treasurer? That's how
Correct.
it works?
And this committee, yes. And so, go ahead, do you have more comment on that?
No, that was my question. And so the treasurer isn't making the decisions with regard to what bonds to buy or what yields to look at or anything like. He's giving you a strategy of what he wants you to follow in terms of, he's at a higher level of policy of how he wants you to proceed.
We set a strategy in terms of duration of the portfolio and essentially the amount of money that should be in the portfolio. What we discuss primarily with the treasurer's office is the cash flow needs of the county. Our job is to make sure that he has enough cash on hand to pay the bills. And then from there, we set the investment strategy, more on a duration target, and then he says, go implement that. And so that's where our investment team is actually, we have guys at Bloomberg's all day long that are talking with broker dealers all around the country, trying to source the best bonds for the portfolio and negotiating the best price and execution on your behalf, which minimizing those costs for the securities helps maximize the income for you then.
Now, the way in which this operates as well is that you're handling money for various different funds, correct? So there are certain things here that are earmarked for a particular purpose, and then we have general funds that we can spend for lots of different purposes. So with regard to that, did you have a graph in here, because I didn't see it, of what funds you're investing?
That's all handled internally from the treasurer's office. What we do is and what the Ohio Revised Code allows you to do is pool all those investments for essentially more efficient investment management purposes.
But you have to keep track of each fund's money.
Correct, that's tracked internally in the treasurer's office. So all the income that comes in from the portfolio will be distributed pro rata to each internal fund that makes up the pooled investment portfolio.
All right. And so, when it comes to how the money is coming into these funds, does this also include money that we're getting from the state of Ohio and from the federal government?
It includes all of your investable assets, yep.
All right.
Can you repeat that? This statement reflects federal and state income to the county?
Yeah, what our portfolio is the surplus funds of the treasury. So it's whatever resources come in excess, basically, of what our current operating needs would be.
So that's all, I'm sorry.
Which, yeah, from whatever source those are coming from.
The star funds reflect.
Yeah, we can open it up
income
to
from all
public
sources.
comment in a second here.
Yeah.
This is.
I just want to understand,
Yeah.
because it was directly related
Yeah,
to
I mean,
Commissioner Grossman's
so,
question.
yeah, we'll open it up in a second.
Yeah.
So essentially, we've got a discretionary manager now that for a couple of decades, we have made the decisions directly. The treasurer would go and source the bonds, would put money in local CDs and things along those lines, especially for our new committee members. And then the treasurer made a decision back in 18,
Yeah, this has been in place for a little while now.
wow, to hire someone to do all of that. So this committee gives a roadmap of how do we want this, and generally it's based on interest rates, and we've been, as a committee, more active than not relative to making decisions. They're a little bit outside of what a lot of these committees do, simply based on interest rates and the committee's expertise relative to long-term trends. Are they cutting rates? Are they increasing rates? Based on macroeconomic conditions. And then also, we've looked at extension of duration. And we actually, I believe, this committee led the state's change of the law to allow us to go to a longer duration, simply based on the fact we thought rates were coming down and coming down dramatically. So we wanted to lock in rates for as long as possible to achieve the higher interest rates. And with an environment right now where rates are falling, I would say that's hopefully the strategy that you all are implementing, is trying to lock in as much at longer term rates as possible, simply because we think that rates are going to be lower upon either when these bonds are called or matured, correct?
Yes, and you're benefiting from that strategy right now, as we pointed out with some of the longer yields, your longer securities that you have locked in at rates in excess of 4%, that's simply not able to be repurchased in this, to be bought in this current environment. So what that means is all these bonds that you have locked in now are at unrealized capital gains. So you have, this portfolio, I think, has over $3.25 million in unrealized capital gains in it, meaning if you went to sell the whole portfolio today, you would take out over $3 million more than you paid for the bonds, in addition to accrued interest. So you have a lot of, essentially it's a good source of backup liquidity in there as well. So in addition to the funds that you keep in Star Ohio, if the treasurer needed to tap into this portfolio for any need, you have the ability to raise funds from this portfolio without selling at any losses.
Sure, but that's a double-edged sword, and we don't want to do that simply because
You'd
if
rather.
rates went against us. Think of the teeter-totter, that as rates come down, prices go up, rates go down. So all of a sudden, rates were going up, we had this, and we could have a $3.5 million capital loss. So we don't want to get into that game, which is why you work
Correct.
cash flow projections with the treasurer based on all the funds that come in, including schools and political subdivisions, of when they're going to need their cash. The auditor comes in, collects it, says who gets what, then you segregate the money, and basically they, our clients, the political subdivisions, the school, assess to you when the money's gonna be sucked out, and that's where you can come in with cash flow projections of saying how long of a duration can we actually endure, because we need 50 million then, and we're not collecting that 50 million for another 4 months, that type of stuff, correct?
That's fair, yeah.
Okay, any other questions?
No, and just for the new committee members, my first, my first job in college was with R. Meter and Associates. So, and I saw Bob Meter just died. Is that
Senior did, yeah, a couple months ago, yeah.
Yeah, he never actually talked to me, I was just a college kid.
Okay, well, thank you so much.
Yeah.
Okay,
Anything
so,
else?
but we do want to,
One more
you
thing.
know, yeah, the most, well, I shouldn't say most important, but, you know, probably a good segue to that discussion of as far as strategy and all that stuff. We do have, a new revised investment policy here before you, which you should have all received via email and hopefully in your packet as well. So I don't know if anyone has any comments.
Randy, why don't you give us
concerns
the Cliff Note version of what's the highlights of?
about that. I mean,
what-
the highlight, yeah, go ahead.
What are we revising?
As far as eligible investments, there's no changes to that. You're referring to Ohio Revised Code as far as what you can buy. This template that I provided to the treasurer incorporates some more detail just as far as procedures, as far as the goals of the portfolio, procedures for selling securities, for hiring an investment advisor, for safekeeping your investment securities. It's just a little more detailed than your previous policy, just as far as the procedures of the investment program. This is a template that we use with many of our county clients around the state. It's the same policy that Butler County and Claremont County use for their portfolios. So it's very standard and compliant as far as GFOA recommended best policies, Government Finance Officers Association, and something that the treasurer thought was an appropriate incorporation into your program.
And again, from the public standpoint, the most important thing, there is no change. We are limited by state law in what we're allowed to invest in, and that was a direct result of what happened with some other counties, particularly in California, that actually went bankrupt for going out and buying corporate treasuries back in, what, the late
It
nineties?
was in the nineties, Orange County Investment Pool.
Orange
It
County.
also happened in Cuyahoga County in Ohio
Yeah,
in
I mean,
nineteen
yeah, there's a
ninety-four
couple
as
of
well.
counties
So
that went under based on bad investments.
that's what brought the maturity restriction down to 5 years was Cuyahoga County, because they were trading 30-year treasuries. It was only treasury securities they were trading, but it was 30 years, and when we had the worst bond market ever in 1994, all of a sudden that was all underwater when they had a big draw on the portfolio.
Yeah, I didn't lump them together because it was the type of security. So yeah, you're right, it was the maturity play, which
Yeah.
is the time value risk versus the creditor risk, which was on, in California, what happened.
But to the larger point of this, Ohio Revised Code sets the stage. You cannot go outside of Ohio Revised Code 13535. If you want to further restrict that with your policy, you can. We recommend you leave the playbook open to 13535, and that's what you bring in an advisor like us for, who's monitoring the markets to help decide if other asset classes that are eligible are appropriate for your portfolio. So you'll see some things in there, like some corporate bonds and some taxable municipals and things that we're shopping, to make sure that we are participating in all of your eligible investment classes when it's appropriate.
So
So
there needs to
anyway,
be
this-
action by the committee.
Yes, we do. And again, I mean, this is a very high-level overarching policy. It's not down to the nitty-gritty of, extending terms or targeting a longer term or whatever. Those are worked out kind of as we go with the committee, and with our relationship with Meter. So.
Yeah, and that's just for the new committee members, that's kind of the way that this has always worked for the last 20 years, that if the committee has a very strong feeling on something, perhaps there's action, but
That's right.
for the most part, treasurer does his job, that's what he's elected to do, and we just try to help set the policy of, wait a second, we really think something's about to happen here. How do we either protect ourselves or maximize the return to the taxpayers?
Exactly.
Okay, anything else?
So, yeah, so that's it. So yes, as far as action, do need a motion and approval of this investment policy, and then
I'll
we'll
make a motion to change our investment policy relative to our Meter and Associates.
Second.
And any discussion about that? Seeing none, call the roll.
Mr. Grossman?
Yes.
Mrs. Jones?
Yes.
Mr. Young?
Yes, I think
And
Mr.
I
Smith.
think the
and
committee,
Mr.
yeah,
Peter.
probably has to vote for that.
Yes.
yeah.
Yes.
So, yes, as well.
Mr. Smith.
Mr. Smith?
Yes.
Mr. Cooper?
Yeah.
Okay, thank you.
Thank you, and, so we'll need, I guess, conclusion of this, signatures on that and all
Yeah.
that, because this investment policy is required to be filed with the auditor.
Very good.
All right, great.
Thank
Before we
you.
go into our budget work session, is anybody else in the public want to speak? And I understand that you'd like to, so. you want?
And it's student government day.
Oh, yeah, well, wait a second, I'll tell you what, that's right, too. Why don't we do our student government thing before we
Terrific.
talk?
Terrific.
And David, would you like to kick that off if you're willing to speak?
I feel like I've already used my word allocation.
So it looks like we have 3 students here.
We have, let's see if I get it right. We have Samuel, Ava, and Kaylee? Oh, Callie. I got close.
All right, well, you have seen some of what we do.
Exciting.
No, so before we turn it over to anybody else in the public to speak, do you guys have any questions about what we do or what you've observed today or what you came prepared, what you thought you would see? Anything?
Well, I
know-
will ask my question. I have to ask it every time. So if you guys are in government class now, so what are the three branches of government?
Legislative, executive, judicial.
Excellent. What do you think we are?
Executive.
Okay. Anything else? Anything else? Judicial, maybe? How about legislative? We are the only political subdivision, we're the only elected officials that actually act in all three capacities. So, makes this kind of interesting job. We act in an executive capacity, we act in a legislative capacity, doing what we just did, which is put forth like resolutions, and then we vote on them to move them forward. And then we also act in a judicial capacity on things like zoning, where we'll actually have a public hearing and we'll swear people in and take testimony and make a decision just like a courtroom would do. So it's kind of interesting from the standpoint of every other elected official fits in one of those three categories, except us, which is, we're created, as Commissioner Grossman always talks about, we're created by statute that really defines and limits what we can do, but it gives fairly broad powers on the areas that a county commissioner can touch. So it's interesting. We're kind of the chief cheerleaders for the county. We oversee the money and involved with economic development, but interesting stuff, and it's an interesting time to be a student with all the stuff that's going on politically in this country. So I'm sure you're seeing a lot.
Well, before you go, what kind of powers do you think we have? So you've been broadly told now that we have functions that are executive, and I think that most of the public would think that we are an executive power. But we do legislate, we do have legislative function, we do have a judicial function at times. So what is it that we're doing? Do you all know, have any idea what we actually do as commissioners? And it was mentioned that we're created by statute, we're not created by the Ohio Constitution. That distinction is important. Do you have any idea why there's a difference between being with what power we have by being created by statute and by the Ohio legislature as opposed to being created by the Ohio Constitution? And this is I don't expect you to know the answer to this. But the reason
I'm
there's
not sure I do.
well, the reason that there's a difference is when we are only authorized to do specifically with what the state legislature has said we can do. And when there's silence, we don't have a right to act. But when you're created by the Ohio Constitution, when there's silence, you still have a right to act. So the Ohio Constitution, for example, establishes cities. And cities have that power that's granted to them there, but if it's silent, it's not prohibited, they also have that power. So now going back to my other question, what do we do? Do you have any idea? You saw some of what we did here today in terms of, we have an investment committee that takes in money. We have a treasurer that takes in a lot of money from a lot of different entities, including for what we do as commissioners, which one I'm going to ask you about. And so what is it that we do? Do you have any idea? Yeah.
Like administer funds and stuff like that throughout the county and stuff like that, and you you try to manage the funds with the treasurer's office and stuff like that.
Okay, so what you're really saying is that we're about to go into a work session on budget. So we actually are responsible for certain functions where we spend money. You're right. So that's true. We do that. But what do we spend money on? What are we authorized to spend money on, for example? Do you have any ideas? So, for example, you got a treasurer right here. You also have, if he'll raise his hand and turn to you guys, you probably know Matt Nolan, who's our auditor. He's here. And you have another county official who's our clerk, Brighton Smith, who's here. Those are three offices But we also have a sheriff's office, we have a prosecutor's office, we have a recorder's office. Do y'all know what all those functions do? They can all explain them to you, I'm not gonna go through it right now. But we allocate the money that we bring in to run those offices. So that's one of the budgetary things we budget for and allocate money we get in. By the way, where do we get money from, do you know? We get it from taxpayers, right? We also get some from the state government, we get some from the federal government, but primarily we get funds from two different sources of revenue. Do you know what they are?
Like one property tax.
You're right, property taxes is a big one, it's like 50% of what we get. What's the other big one that we get? Do you know? Sales taxes. We primarily run sales tax and property tax. Other jurisdictions have different ways of raising money, you know what, and important function that we've got, you've got cities, you've got cities in this county, and you've got villages, which are a smaller form of a city, but you also have townships, which we call unincorporated parts of the county. We have no authority over cities, none. But we do have authority over unincorporated parts of the county, which are the townships. And that's where zoning comes in too. If they're not a home rule jurisdiction or a township where they deal with zoning, and there are some that are like that, we do the zoning, which was mentioned with the judicial functions sometimes that we have. It's also a legislative function too. But we also are responsible for what this building, you see this building, you've got court buildings, we are responsible for facilities. So we build the facilities. We just dedicated a county courthouse, which deals with judges who basically have power over municipal court type of business. So those are some of the things we do, and mostly you're interacting, the public is interacting with a lot of the other offices. The clerk, he handles legal filings. He's also responsible, when you get a car title, you go to his office too. He runs those as well. The auditor is probably one of the most important guys in the county, because he actually takes every single piece of property in the county, the entire county, and he establishes a value. He establishes what they're worth, and that's what determines your property taxes.
It's his fault.
Yep, and that's why we blame him for everything. Everything that's bad. Any other questions? I'm not gonna belabor this any longer. But we are very limited in our power, although the power we have affects everybody in the county. So did that help you guys today?
Thanks for playing.
Really? Any other questions from you before we turn it out to the public itself? You've got more.
Yeah,
I'll get those questions.
yeah, so like, what's like the education required for like your position?
Sorry, what?
I'll help you with those questions afterwards. That's right. I'll help you with those questions.
That's great.
Thank you.
Super. Okay, so now, I know we've got somebody else that'd like to speak.
Thank you.
So, and by the way, we always open up our meetings to have a public comment from people so that they can share with us. And that's part of good government, is being transparent and being willing to listen to what the public has to say.
John Fauner, a resident here in Lebanon, 1221 Turfway Court. Thank you. Good to see you all again. I'm going to hold off on the question that I brought with me today, because I think it'll be best asked after you've had your budget work sessions, because it relates directly to the impact of our new government shutdown and the flow of funds that may be coming from the federal government. So I'd rather you have your...
Well, I can tell you that our budgeting is not going to have anything to do with that.
It's our first initial meeting. so-
Yeah.
Well,
so it's-
fair enough, fair
So
enough.
I would
It's-
recommend that you do it now as opposed to
Well,
sitting in
my
something.
question, thank you. My question is really the same question that I've asked the last couple times I've been here, is that what are your plans for county employees and programs that benefit or rely upon, not benefit from, rely upon the flow-through of federal funds to those programs? People in the county deserve to know what's going to happen to the social service, the veterans programs, and so forth that rely on federal funds that you administer. So that's the question. I suspect that it's gonna be a topic of conversation, from the committee, and from the commissioners as to, looking at this, what we know as a very, unreliable and unpredictable source of funds. Certainly not the biggest piece of, county funding, but an important one, especially for the people who rely on those services. So that's the question, and I suspect it was already part of your agenda, so we'll belabor that. Secondly, I'll put a caveat on this. It's probably dangerous to accept a financial, a comment on a financial report from a retired engineer, but my impression of the report is that it is very favorable, and it is a compliment to the decisions that you all have made to run a very fiscally conservative budget on behalf of the county. I see the 5-year component only occupying 1% of the of where your funds reside, and you've got what looks to me plenty of room for those in that 5th long-term category to secure some longer range stuff. That may be not the most significant part of it, but that jumped out at me. So I want to offer my congratulations for what looks to be a very positive financial report in very turbulent times. So thank you for that. That's all.
I appreciate your comments, and I'm hopeful that Congress will find its way to a compromise here soon, and you know, we'll continue to administer those funds. I mean, so far, all of the indication has been on the things that at least I've been monitoring, like SNAP and WIC in particular, is that the president and the administration has said that they're committed to continuing the flow of those funds. I think we don't know exactly what that means, but that there is a commitment by all parties to continue that for at least a period of time, and so there hasn't been any interruption in those services as of yet. So I'm hopeful that collaborative mindset remains through this, but you know,
I share your hopefulness. I'm not sure I would characterize the comments and actions of either the president or Congress as optimistically as you have, or as favorably as you have. But I share in your hope that those funds for the least advantaged among us continue.
Well, if it's any consolation, the WIC Association, which is one that I'm a big proponent of WIC and the work that it does to keep our babies healthy and well nourished, that the WIC Association is even acknowledged that, you know, shared commitment to, you know, by the president and the executive branch to ensure that those funds are continue to go on. So I'm not usually described as the optimist here, but I did take
compared to us Democrats in the
I did take some
county.
Comfort in knowing that, you know,
Yeah, good.
that's a program that I you know has just broad-based appeal, and I think when the president himself and that the association that supports the agencies that administer the program kind of are echoing the same thing, I think the intention is
That's
there.
great
So
news.
the devil's always in the details,
Right.
but we continue to monitor that, and there's not been any change in any policy at this time, so.
All right. Thank you. That's all. That's good. Thank you very much.
You're good, thank you so much, and I don't know, I usually get an extension on the filing of my tax returns for the state of Ohio and the IRS, and I'm pretty sure this Wednesday I'm gonna have to file that, and if I owe anything more, I'm gonna be paying the federal government. So despite the shutdown, they're still collecting
Those are
money, we're
essential
still
workers.
filing.
Those are
So they're
essential
still
workers.
filing tax returns, and they're still taking in money. Which ultimately, when this thing reopens, because typically these things last 2-3 weeks, something like that. I mean, the 3 weeks is long for these shutdowns, they
We just
periodically
started
happen
week
in our
3.
history. and then they start up again, and then they pay everybody back wages and stuff that stopped, and that's typically how they go.
Well, and I do wanna say, having flown this weekend, that, I was very grateful to the TSA and air traffic control that continues to show up and do their jobs without pay, and I appreciate the work that they're doing while Congress tries to figure it out, so.
Yeah, no, I mean, number one, I appreciate your comments relative to the investment committee, because I think a lot of people don't get the details of, you know, if we can squeeze an extra $1 million or $2 million, especially years ago when our budget was much smaller, that is such a big deal. And we've been very deliberate on trying to squeeze investment dollars. And there's the amount of, in 21 years, the amount of stories written on our investment committee has been zero. I mean, no one cares, no one talks about it unless you screw it up. So we've intentionally tried to do that, so appreciate those comments. I think this is my third or fourth government shutdown, and when you said, you know, we're gonna talk about it, honestly, we weren't gonna talk about it. It really doesn't even affect us right now. Everything is, we have the money, their staff has not come to us, said we have to do this or do that. There's nothing that's changing for any county resident as of this point right now, and we'll see. But yeah, there's been, and even if the federal government has a prolonged shutdown, that would not impact our employees at all. We don't lay people off. The 1,000-ish people that work for the county, they're not going anywhere just because the federal government can't get their act together. And the number one thing I would say to that is I appreciate the administration coming through with, we gotta pay our troops, especially since my daughter is one right now, and that matters to them. But I 100% think that if you're an elected member of Congress and there's a government shutdown, you shouldn't get a paycheck. You just, both parties, boom, you don't do your job, other people don't get a paycheck, you shouldn't get your paycheck, and that's just easy. But appreciate the comments. What else we got?
Okay, well, we have is there anything else before we go into our work session on the budget?
No.
And are we gonna do that in our conference room?
Or could we hear from the auditor, please? I mean, you made a big impact. Again, we've been talking about I would like to know what's going on with property taxes. You are literally at the tip of the spear for trying to come up with something that's reasonable. And I know you testified this past week in Columbus. What happened? What's going on?
I did testify. It was kind of rewarding. There was the first that I've seen major unanimous votes out of committee by both Republicans and Democrats, so that was exciting to see, on relatively small provisions that, in my words, do for the 88 counties what Warren County's already been doing. And so it gave the Budget Commission authority that our Budget Commission has been using for years. This commission has used for years to discourage large carryover balances. Commissioner Grossman, very influential with senior services when they had a large balance. This body, when they had a large balance, doing rollbacks. And so, yeah, that's all that happened, is that we're trying to take the Warren County way and push it to 88 counties. That passed the House, now is in the Senate. But the larger, somewhat more controversial bills are still sitting in committee. House Bill 186, which I feel is the key to a lot of this, had its 8th hearing in committee. So those of you that have been around, it's a lot of hearings. You'd think you would get through it, but it's still there. We're getting close to the breaking point. Once you get into the end of October, it's almost too late. And so if they don't pass something very, very soon, there's nothing that the legislature is going to do that's going to help the taxpayers of Warren County in 2026. And so then, again, it falls to locals to figure out how to do it. I don't expect the legislature to pass anything that impacts 2026. So.
Have we found out any more details about the provision that we could act on now? Is there an actual, because we've obviously been concerned with the impact to the schools, and we don't want to arbitrarily cut their budget. Any updates on that?
We did. The prosecutor's office issued a memo that I've shared with staff that says you're not allowed to fill in those gaps.
Well, not filling it in, but will it actually cut them? Remember, because our friends in Butler County said it actually didn't really affect the schools by them rolling it back, is what literally I had a commissioner tell me.
I think that commissioner was a little mistaken, without knowing exactly what he said. No, it clearly is intended to and does take money directly from the local governments. And I've got a spreadsheet for you that shows exactly how much it is. It's not huge amounts of money for each individual one, but for some of the larger school districts, it is real money for each of the provisions. The homestead provision, in talking to Butler County, there's been no pushback, at least vocally, from anybody about the homestead provision. If the owner-occupied credit, which I'm not aware of any county that's done the owner-occupied credit, that becomes a real number. That's a much more substantial number for the taxing entities. Obviously, it impacts a lot more Warren Countyans. And so, you know, that's something you guys are gonna have to weigh, and whether you want to give a tax reduction to all Warren Countyans or just those that are the most in need in the senior
I'm
community.
just not sure about, I mean, I'm real uncomfortable in taking an action that undoes what the voters did. That just feels really odd to me. Is there anybody that is talking about that?
To some extent, we do it fairly regularly, right? I mean, the homestead program in and of itself, I guess those get reimbursed by the state. So that, you know, that there is some talk of that. Everything that we're talking.
That's an important distinction.
Yes, yeah.
Is that they do get reimbursed by by someone, and in this instance, the state, and the prosecutor is saying that we similarly cannot reimburse those local governments for which we may decide to overturn the will of the people. I mean,
Yeah.
that is a distinction with a huge difference.
It is, yeah. The governor's subcommittee talked about this a lot, because almost every proposal that I've made and that the Auditors Association have made have been undemocratic, small d, right? Because every single tax that exists on property in the state of Ohio was voted for by the voters at some time. My argument would be, I don't know all the time that the voters understood what the 20 mil floor was and what the impact of inside millage was. Those are kind of insider, really complicated ideas that they've elected us to interpret and make the best decision for. I don't know if that's right, but that's the stance I'm taking, because I've talked to hundreds and hundreds of elected officials, and most of them don't understand, or didn't a year and a half ago, the 20 mil floor, inside millage, those kind of really intricate things. And so I don't know that the average voter, when they went to vote, knew how those things all interacted.
Is there any talk about the whole simple cap on appreciation of homes?
Valuation, yeah.
You know, that just because your house went from 300,000 to 400,000, all the political entities are operating just fine with your assessment at 300,000, but yet now we collect more tax because it's 400,000. Is there any?
That's basically what 186 does. I mean, that's what 186 does. It just takes it on the tax side rather than on the value side. Your proposal, and Commissioner Jones and I talked about that proposal, is what California does, right? They say your house is worth that when you bought it, it stays at that, and for all intents and purposes until you sell it. That creates a lot of issues. It won't work in Ohio as long as we have the LLC loophole, because no one will ever sell a home again, because why would you? And so we would have to close that to be able to do that. That would have to be number one. There's no support for doing that. It creates, according to Senator Lang, major business issues, even though 47 out of 50 states don't have it. And so that's one aspect of it. The other aspect is Ohio has a good valuation process. We try to maintain accurate values more than most. So I would be very concerned with messing with the value side rather than the tax side. We can get there. We were there forever. All we have to do is address the 20 mil floor and inside millage, and we wouldn't see increases. Your value could go up, double, like many of ours did in Warren County. In the 90s and 2000s, our values went up significantly. We didn't see these levels of tax increases. It's because of the rate side.
When you make some comments, they just fly right over the
I'm
public's
sorry.
head. And so when you said the LLC rule, what you were talking about is the fact that if a entity like a limited liability company owns a piece of real estate, instead of transferring the real estate, you just buy the LLC, and then there's been no transfer.
That's exactly right.
And so I only make that because most people didn't wouldn't have caught
No, that's right.
that problem.
That's right.
But but I mean, I don't know that this democratic thing is really, I mean, most people who go in and vote for a levy or something like that, they have a general idea of what's going on, but they really don't understand this whole system at all. And the fact that there are other people that get into the system and give, so for example, people don't get the fact that, okay, my real estate goes up, but we're only paying 35%, you're only taxed on 35% of the value of your real estate. And then there's all these, nobody gets what millage is at all, or how do you calculate it, or what you do with it. So I get the democratic point, but the fact is all this property tax stuff is so arcane, so difficult to understand. People don't know what they're voting for. And so I do kind of rely upon people with more expertise, because we do elect representatives. We elect you, we elect our representatives, and that's why we're a republic. We're not a democracy. The democratic process is that we elect representatives that make good decisions, I hope, to help us with this, because the public will never understand what's really going on.
I think that's right, and I am not the most positive person in this room. I think we would all agree with that in general, but I am fairly confident that they are going to do something in Columbus. I do feel like there is a strong will to do something to make it simpler, make it better. I just don't think it's going to happen this year. And so, that there's going to be a gap there. I hope that the public keeps the pressure up to get something done. We're going to start our reval process again next year for 1/1/27, and I would be very upset if I'm speaking to you again in the next because it's going to be a 20% increase. I mean, you see the sales happening here. It's going to be a significant increase. I'm just throwing 20% out, but it's going to be a big number, and we're going to go through this. I just hope the legislature addresses it before we get to that
And
point.
I think that that's the important point that you ended on, is, as you well know, because we've talked about this before, is that they are the body that has to make these changes. It is not something we can fix in a piecemeal way, and I think that the public continuing to communicate with their state legislators is incredibly important, so this can come, some resolution can be brought about quickly, so that homeowners aren't struggling for another year, in hopes that they can get it done before the session expires.
By the way, a question on this LLC thing again. If an LLC does own a piece of real estate, like a home, because that can happen.
Absolutely.
And they, of course, to go to market, you're gonna have to have a real estate agent that markets it at a particular address. But then if somebody buys it, that's not really necessarily a reportable event.
It's not.
And that, which is really the curious thing about this, is that if you put your house into an LLC, you would go out and market it, but then from the auditor's site, there's been no transfer.
That's right. That's exactly right. It doesn't make any sense, and the arguments for it, there's one argument for it. It keeps taxes lower on the houses that have good lawyers that do this for them, and mostly commercial properties. It's not a huge issue in residential, though it's growing. It's wrong. It's wrong. It needs to be closed. I helped write a bill to close it 10 years ago. At the time, our representative and I met about it, and he said this is an increase in taxes. And it is for those individuals that are using the loophole, but for the 98% of Ohioans who aren't, it's a fairness issue. So it's a small thing, it's a little pet project of mine, but I do think it's important for the overall picture.
Well, I mean, in the big picture, I go back to this also, that as an economic question, we're talking about investment stuff earlier, that if you tell me my asset that's worth $200,000 in 7 years can be worth $400,000, but it costs me $2,000 more a year. That's the best deal you're ever going to be offered, unless you're on a fixed income and that $2,000 a year means you can't keep the asset. So is there, and that's that whole, does government have a lien on the property? Yeah, that type of stuff, because that's, you know, your net worth just went up by $200,000 and it only cost you a couple $1,000 more out of pocket. That's the best deal you're ever gonna get, unless you say, I don't care, I'm gonna die in this asset. You're gonna wheel me out of here, and I can't afford to keep it. That's what, honestly, is no good.
That's right.
But, you know, from a financial perspective, it's great that all the property owners in Warren County, you know, that people, the free market is saying people wanna move here because, in no small part, the local government and the schools and the economic stuff that we've helped try to create. So that's very frustrating to me that it's great that everybody's home values are going up, but you can't necessarily pay the taxes. But then there's the offsetting problem of the market needs to reflect first-time home buyers, and there's gotta be a supply of those, because even though that $200,000 house now is $400,000, those 20-somethings can't afford a $400,000 house. So that's just one more aspect of this free market.
See, that'll show you for
Nice.
showing up.
Here to support me, don't blame him.
All right, thank you, take care.
Thank you.
All right, anything else? We're gonna go into our conference room to do our budget process, and thank you very much. Public forum. Okay.